Hey, it's Matt Decker with Leveraged Wealth Management. Today I am talking about a topic that comes up quite often, and it's really easy to just go through. This video is not going to be any more than 5 or 6 minutes. We're talking about cheap term insurance. Every single time someone comes to me asking for term insurance, they're always looking for the best deal, the cheapest option that they can find. So what I've done here is I've just outlined, this is just your typical rate sheet. So this is $1 million term insurance policy. This is a 40-year-old male preferred non-smoker. And basically what you can see here is just a bunch of different companies all on the same sheet. We got John Hancock, AIG, Lincoln, Principal. If we go to the next page, we get even more options: Protective, AXA, American National, Securian. Essentially every carrier that you could ever want to look at is on this rate sheet, and you can see that they've got their rates right here. So $817 for the year, $819 for the year, $830 for the year. This Securian product is $839 for the year. And so what I see so often is people will ask for the cheapest term insurance policy. They'll get a rate sheet like this. They'll go to the very first page. They'll look at the company with the cheapest rate, which in this case happens to be John Hancock, at $755 a year. And they'll say, I want that one. It's the cheapest. It's the best rate. But here's what they're not telling you. Here's what you're not talking about: the conversion options on these particular policies. So something that I tell clients every single time that they're looking at term insurance is, you want to be the person in control of your policy. You don't want the life insurance company to be able to tell you when your coverage ends. So what I mean by that is you have to look at all of the conversion privileges inside these policies. So that's what we're going to do, and we're going to run through them real quick. So here's our John Hancock term insurance policy. And if you scroll down into the policy ledger, so this looks like it's on page 1 basically, you can see right here, conversion option. And so let's just read this. This policy offers a conversion option that's available during the earlier of the end of the select period or to attained age of 70, whichever's earlier. During the first 4 policy years, this policy can be converted to any single permanent life insurance policy offered for sale by us at the time of conversion. Okay, so that's important. In the first 4 years, you can convert to anything. But here's where the catch comes in. During policy years 5 through 10, this policy can be converted based on this vitality status. Okay, well, what is the vitality status? It's something that you have to qualify for every single year. So if you qualify for gold or platinum for 3 consecutive policy years, this policy can be converted to any life insurance policy that they offer for sale at the time of conversion. Otherwise, so if you don't qualify for this vitality status, in other words, if your health changes, because you have to qualify for this every year. So if your health changes, otherwise, this policy can be converted to a single permanent life insurance policy we designate for conversion. Translation: you can get a really crappy, really expensive policy if you don't qualify. Okay, so that's John Hancock. Cheapest option, bad conversion privileges. Let's look at AIG. They were the second one on the list, and AIG does the exact same thing. You scroll through and you look for, oh, there it is, conversion option availability / limitation. This policy may be converted to a permanent life insurance policy issued by the company for this purpose. Issued by the company for this purpose. What does that mean? It means that not every policy issued is for the purpose of conversion. Translation: you do not get to choose from every product or every policy that they have available. And it goes on and on. Let's look at Lincoln. Again, these were the top 3 options that you can use. Conversion: as stated in the contract, this policy may be converted at any time during the level term period or prior to attained age 70, whichever is earlier. That's important. Proof of insurability may be required to convert to a policy if it involves insurance on another life. All that is pretty standard. Here's the kicker: beginning in the 8th policy year and for the remainder of the conversion period, the conversion may be to any permanent life plan made available by us for the purpose of conversion. Translation, not every product is available to convert to. Here's principle. We're going to see the exact same thing. Can term coverage be converted to another type of policy? 20-year term may be converted to one of our permanent cash value life insurance products offered at the time of conversion without evidence of insurability anytime during the first 15 policy years. So this one actually has an earlier conversion period. All the others were throughout the life of the contract or attained age 70. This one cuts it off 5 years earlier, so only for the first 15 years. That's interesting. And then let's look at protective. This is one that you didn't see at the top of the rate sheet, but check out the conversion privileges. During the conversion period shown below and prior to the insured's 70th birthday, this policy may be converted without evidence of insurability to any company-designated plan of life insurance. Translation, you can convert to any policy that they sell when you want to, as long as it's inside the conversion period, and the conversion period for this 20-year term policy happens to be the first 18 years. So what does all this mean? All this means is that if you ever see a rate sheet like this, chances are you're not getting the full story. You want to be the person in control of your insurance and when it ends, not the company. Because what's going to happen here is you buy this John Hancock life insurance policy, you try to convert to it 10 years down the road because maybe your health changes, but guess what? You didn't qualify for that vitality rider, and now you can't convert to a policy that you want to, or the policy is so cost prohibitive that you can't convert because you can't afford it. It happens all the time. So here's what I'm going to tell you that you need to do. If you are looking at term insurance, you need to go to my website, leveragedwm.com/term, leveragedwm.com/term. You're going to see this little pop-up. You just basically go through these options. Yes, I want cheap convertible term insurance. You fill out the information. We will be in touch with you and make sure you get a policy that's not only affordable, but that is also going to be convertible to any plan of insurance that you would like in the future, whether you're healthy or not, so that you can choose when your term insurance runs out and not the company. This has been Matt Decker with Leverage Wealth Management. Thanks so much for hanging out with me. If you like this video, share it with your friends. Give it a thumbs up, like, subscribe to my channel. Everything that you do there helps this channel grow and gets the information out there to people that really need it. And we will talk to you next time. Take care.